Okay, so welcome to the numbers for this week's market report. We are going to dive into the activity. Again, it's another week of opportunity for buyers. And let's just get to the graphs. Let's go straight into it. So as always, you can see that the buyer activity is our orange line and the inventory is our blue line. So buyer activity has been diminishing pretty significantly as we've come into the fall months, which is what typically will happen. So we're kind of returning to a normal fall market. And then inventory has actually been increasing over the last 2 weeks. So last week we had a huge gap. We had inventory here and buyer activity here. So that put us into a buyer's market, the strongest one we've seen in almost a year. Now, I've mentioned this a couple times, but we had a period last year around this time. It was actually about 3 or 4 weeks earlier in the year last year, but we had a period where for about 6 weeks, buyers had a window. It was a window where we were seeing that sellers were letting buyers have inspection contingencies because there wasn't as much competition. Some sellers were actually giving a little bit on the subsidy side if they were overpriced. But we saw our buyers having an opportunity, a window of opportunity. And Kelly and I were really kind of pushing people at that point to really take advantage of that because we didn't know how long it was going to last. And then sure enough, after about 6 weeks, we got back up into the strong seller's market. So we've been hovering here in a neutral seller's market for quite some time. But for the last 2 weeks, we've been down here in a little bit of a buyer's market. So what does that mean? It means that right now, buyers have a bit of an opportunity on more properties, not all properties. I went to an open house yesterday for a showing for a client, and the cars were lined up and down the road. The house was packed. That house is going to go very, very quickly. But we are seeing some properties that are taking, instead of going on the first weekend, it's maybe taking them a full 7 days or even, maybe 2 weekends to get under contract. And what that means for a buyer is that if you move fairly quickly, you can be the only offer on the table. And if you're the only offer on the table, that gives you the chance to retain some of your contingencies. Maybe you get your inspection contingency, retain your appraisal contingency. It gives you more protections. Values are not coming down. Sales prices may be coming down a little bit for the properties that are overpriced and have sat for a little bit longer, but their actual market value has not come down. But it's an opportunity for buyers to get in there and not face a high level of competition. So what I'm encouraging buyers to do right now is we don't know how long we're going to stay in this part of the market. We don't know how long it's going to be here. What we can pretty certainly predict, there's no guarantee, nobody has a crystal ball, but we can predict with a fair amount of certainty just based on history that at any point, probably it could be next week, or it could be maybe 3 or 4 weeks down the road, we're going to start easing our way back up into that seller's market again. So it's an advantage, or it's an opportunity for buyers. As a seller, it's still a really good time to sell because inventory is still historically low. You can see even last year, we were in this level here, and inventory hasn't even gotten up to that level yet. So inventory is still low. So if you're selling, get in there. There's a lot less competition for you. There are fewer buyers, but if you price it right and it's positioned appropriately, it could be like that house that I went to yesterday where they were lined up out the street. So we're still seeing multiple offers on many properties, but we are seeing more properties that are also being able to be purchased with just a single offer. So it's good. It's good time for both, but it's really a good time for buyers right now to hopefully get into a contract where you might just get the property at asking price instead of having to pay over. All right. If there's anybody that's holding on for prices to drop, there's a very interesting slide that we're about to go over with Tatiana in the Mortgage Minute. So make sure you watch until the end, because you're going to see that over the last 81 years, there have been 73 years where the year finished with positive appreciation. Now, it might have only been 1%, but it was positive appreciation. There have only been 7 years in the last 81 years where the year finished out with negative appreciation or depreciation. 5 of those years were during the 2007, 8, 9, 10, 11 real estate crash, which that financial crisis was caused by the real estate market. There were only 2 other years outside of that event where the year finished with a negative appreciation. So if you're sitting there and you're anticipating a huge price drop, you are actually hurting yourself because prices are continuing. They're projected for this year to grow between 5 and 8%. So if you were waiting 2 years, that's 10%. Even if you do get a price drop for a moment in time, it's going to have to be a significant price drop for you to even get back to ground zero where we are today. So just watch this Mortgage Minute. If you have any questions about the market, about the prognosis of the market, please feel free to reach out and let us know, and take advantage of this opportunity. If you're a buyer, let's get you out there. Let's go look. Let's see if we can get you into a property without having to battle multiple offers. Okay. All right. Let's get to Tatiana's Mortgage Minute, and I will see you guys next week. All right, so now we're here with Tatiana for this week's Mortgage Minute, and Tatiana, catch us up with what's been going on with the rates this week.
Good morning, everyone. Yeah, the rates, they increased again one more time. Let me share my screen so I can show you my the charts that I have here. If you can see, well, right here we have three different lines, graphic lines. The middle one, the dark blue, it's conforming rates, and this week they went from to 7.787. That's with 1 point, and 1 point is 1% of the loan amount. It buys the rate down.
Okay.
So the mortgage rate increased drastically in 2022, and now they've been very volatile. You know, they go up and down. Lately, you can see the trend is, you know, they're going up. Where is my cursor? Is right here. But, you know, they're expecting them to maybe go down some later in this year because it becomes a little bit pricey for buyers to, you know, to buy houses with interest rates as they are right now. A purple line, that's FHA mortgages. FHA is Federal Housing Administration, government programs. Rate is a little bit lower at 7.45%. And the crazy light blue line, that is jumbo rates, and jumbo rates are not conventional, not Fannie or Freddie rates. They are private investors that lend loans for loan amounts over a certain amount, depending on the area. Like in our DMV area, it's 1,089,300, and above that would be a jumbo loan. So yeah, that's what it is right now.
So just to kind of clarify and correct me if I'm wrong. So the middle line, that's Freddie and Fannie.
Correct.
Okay. Which we talked a lot about last week, which was really helpful. And then the top line, the light blue line, that's going to be not Freddie and Fannie, so it's not government backed. So that's why that interest rate's a little bit higher, because it's a little bit riskier for the investor.
It's a jumbo.
It's jumbo loans. Yeah, they are in, you know, they give their own rates, and because the prices, the loan amounts are higher, it's more riskier. And as of right now, the rates are higher than on conventional loans. If you can see here, at some point they kind of meet here in beginning of October, but right now on 16th last week they were almost the same. Now there is a little bit higher gap, so they kind of all over the place. You can see the zigzag going.
And FHA is the bottom one, and I think we're talking about FHA soon. We're gonna go into that in more detail, right?
Yeah, I think it's a good idea to talk about.
Okay.
All right, very good. Okay, so we've had some questions this week, and every time we have questions, we're going to bring them to you for an explanation. So what is the difference between a pre-approval and a full approval when it comes to the borrower?
You know, I've heard some brilliant agent say something about a POFA. What was that? I think it was a pre-offer full approval, and that was me. Yes. What's the difference between a pre-approval and a POFA?
Yeah, that's right.
Let's talk about that. I should have changed my slides on POFA, but I apologize.
It's gonna catch on, trust me.
Okay, so in clarification, a full approval that you're about to explain is what happens through the contract escrow process. POFA or a PUFA, whoever's a POFA, it happens before they go into escrow, right? So that's really the only clarification on that. So
right, yeah. Let me let me talk about that. So the pre-approval is, you know, when clients does a loan application, I look at, I pull the credit, I review income and assets, and that's something that clients have to do before they start looking for property, right? So you're not gonna go look for a house, fall in love with it, and then do a pre-approval and you find out that you cannot buy, you know, you cannot get a mortgage. So we always recommend doing the pre-approval first. I run it through desktop underwriting. It's a sophisticated system that just, you know, analyzes the full file, the whole, you know, everything within 30 seconds and gives me approved or ineligible decision. And then I work with it to see how we can make it work. You know, I give client different options on what kind of loans they could get, maybe conventional, maybe FHA or whatever. And that is a pre-approval. I give a pre-approval letter. That's what you would need when you put in an offer on the property. The POFA is something that
can I throw this out there real quick before you go into the POFA? So the pre-approval, like you said, number one, it helps them establish their budget so that they can afford what they're looking for. And number two, it has to be done before they find the house they want, because when they find that house in this market, they have to move quickly and have to have that letter to submit. So that leads me to the question of, if they come to you and they have all their documentation that they can provide you very quickly, how long does it typically take for them from first contact with you to get that pre-approval letter? How quickly are you able to turn that around?
I can do it within 24 hours.
Okay.
Or even a couple of hours. It depends on complexity of the file. Typically, you know, within 24 hours, it's not a problem. And, you know, sometimes even faster.
Okay.
And it is true. I do want to make the point that, you know, buyers oftentimes, they don't really take us seriously when we tell them they need to get the pre-approval before looking. But it's a fact. When we submit offers, the seller's agents, they don't even look at offers that don't have a pre-approval. Like it's not even, in our area, it's not even considered a complete offer until you're able to provide that. So that's why we really encourage people on how important it is to get this pre-approval. So I do need to say that.
Exactly. Yeah. And, you know, a lot of times clients, you know, they qualify, they know that they qualify, but maybe they don't really understand what payment is gonna look like with that particular sales price category, right? So that's always good to do that pre-approval, because besides the letter, I also provide with the loan estimate so they can see what the payment is gonna look like, what cash to close they need to have on hand to, you know, to be able to get this mortgage. So it's very important to do it pre-approval first and then start looking for houses, and not vice versa.
Right.
Gotcha. Okay.
Right.
Yeah. And, you know, the step further would be to get the full approval even before they find the house. That's PUFA, right?
Yes, that's the PUFA, pre-approval approval.
So what's the difference? What are the extra steps that, number one, they have to go through to get from the pre-approval to the full approval pre-offer? And what additional steps do you have to go through?
Right. So with the full approval, I would have to collect more documents than just with the pre-approval. With pre-approval, I ask for pay stubs, or, you know, the tax returns if someone is self-employed, or, you know, 2 months of bank statements. With the full approval, I might need to ask for additional documents, like maybe driver license, of course, and IDs or some other document that could be, you know, pertaining to their particular situation. So, and then we'll send them forms to sign, it, like disclosure forms saying that, you know, we want to proceed with the full approval. There's no obligation, there's no cost for that, but it just gives them that extra assurance and make them stronger buyers when it goes through the full approval. So I send the file in our process, you know, operation center. The processor will pick up the file, maybe do some verifications of employments and things like that, and then send the file to underwriting. And the underwriter is a person who has a higher level of authority to, basically look through the whole file, all details, and give a commitment to land. They say, we're giving you commitment letter. The commitment letter might have some conditions on that. It could be, we call it conditional approval, because you definitely need a property, right, before you can get a mortgage. So one of the conditions would be get under contract. Maybe we need to get appraisal done. Maybe they ask for some additional documentations, but that full approval on hand will make the buyer much stronger candidate and more appealing to a seller than someone who just has a pre-approval.
Yeah,
right?
That's exactly right, because in this market, you're still going against, all the buyers are going against other offers. So oftentimes this allows us to write an offer without a finance contingency.
Yeah.
And with Tatiana, for example, we're able to confirm with her, like, hey, this is a full approval, right? Can we waive the finance contingency? And if she's put it through processing, underwriting, and they've still given you guys that conditional commitment letter, then that's a yes.
Yep.
And that doesn't mean we don't require an appraisal contingency. Sure, we would keep that and whatever else you needed, but it's almost as good as a cash buyer or a cash offer, right? It's amazing. It's incredible.
And the closing can happen quicker. So you've closed deals for us in as low as 10 days with this being in place. So and for sellers, that's very enticing, because they want to know that they're going to be at risk of the contract falling through for shorter periods of time.
Right.
So there's a lot of benefits for that full approval.
Yeah,
and the fact that the borrower doesn't really have to do much more to go that extra step. It's like the difference is just a few additional docs that are needed. It's really not that.
Yeah.
There's not a whole lot there, but I think that a lot of times buyers are worried that means they're locked into the loan. So Tatiana, can you just say again, for clarification's sake, you've already said it once, that it's no obligation.
Absolutely, there's no obligation. Nobody's gonna force you to buy a house if you cannot find the house you like. Nobody's gonna give you a mortgage if there's no house. So if you get fully approved, you decide that, well, actually, I'm not gonna buy anything right now, it's not a good time, we cancel the whole loan and that's it. There is no hit on the credit. Sometimes people think that it might hit their credit score because they didn't go through the buying process, even though they applied. So there's really no harm to them. But it's peace of mind that I'm approved, and now I went through all, the hard part, providing documents, and now when you find the house, you can just concentrate on packing, right? You don't have to worry about this approval process and running around getting documents while everything is already packed. And then I would start asking you for documents if we would do it other way around, right?
Yeah. That's a good point, because once they've gotten their contract accepted, they want to be focusing on coordinating their move, right? And packing, and if it's schools or utilities or whatever, all that, whatever's involved there, and not focus on all the paperwork that you guys need. If they've already gotten that handled, then they can focus on the other things, because people don't get to take time off for buying a house. They still have to go to work and still have to do all the other stuff. So it's really good all the way around.
And I think another important benefit of getting fully approved before finding a house, in the interest rate environment like this, like I showed in previous slide, the rates are going up. We can lock the interest rate in when we're still looking for a house, but we have that full approval. We send the file for a full approval, because typically rate gets locked only once someone is under contract. We can lock it TBD, to be determined property.
Don't lock and shop.
Lock, shop, and hold.
Yeah. And then for those people, let's say again, who are concerned but the rates are going to go down, I'm going to wait. Fine. Refinance. refinance when the rates go down, right? You don't want to wait and start shopping when everyone else is going to dive in, and then your competition is so much higher and everybody's bidding the price up so much higher, and it's really gonna, I think you would eat it in the end.
We heard that prediction at the meeting that we were at.
Yeah.
Who's the mortgage guy that you had mentioned? This I can't remember his name.
Rankus,
he said he was a speaker, nationwide speaker, and you had talked about him, and you sent the video that
I forgot his Habib,
that's it, yes,
something like that.
So he spoke at EXPCon, our brokerage, last week, and he gave an analogy, which I've heard this a couple times. He said for every 1% that the interest rates come down, that's going to equal 2 million buyers coming back into the market. So everybody's waiting for the interest rates to come back down. Well, with low inventory, when those 2 million people come back to the market, what's that going to do to prices? And we have the evidence of what that does. It causes people to overpay at the purchase point. They're overpaying because they have to bid. So now is the time to lock in the price when it's reasonable, even at a higher interest rate, and then refinance if you can.
Yeah.
Exactly.
If not, you're building regret upon regret upon regret, and that doesn't work for anybody.
That's right.
I did see that. I saw his PowerPoint presentation, and I did see that chart where he's showing what it's gonna cost you to wait, how much it costs you to wait. So let me, if you want, I can.
Oh yeah.
Maybe I'll share that one.
I think while you're pulling that up, we need to add to our list a whole cost of waiting scenario.
Yeah. We kind of did that with that one video that we did, but
did we?
But we could dive into some more depth, especially with the current.
I just like those so much.
This one.
Okay, yeah.
Right here it's showing wait for lower rates, and that's how much it's gonna cost you. I don't know if you can see well.
Yeah.
This is the one, right? Wait for 6 months. It's gonna cost you $5,000. Wait for a year, it's 33.
Wow.
42, 70, 80,000. Wait, when you're waiting for 2 years, when you're waiting for 3 years, it's 115,000. That's a cost for waiting. And another chart that he had was month over month change in real estate value. It shows right here that this is just this year, actually, from January to August.
Yeah.
And it's showing the appreciation percentage.
That's what we've been seeing that across the board, between 5 and 8% on even condos, even low end condos. We're seeing escalating at that 5 to 8%.
What area is this based on? Is this nationwide?
I think I'm not 100% sure which area, because that's his slides. I remember one slide was for Utah, but we can easily pull the data. I think it's all throughout the country, and our area appreciates pretty well too. So I don't think it's not accurate for us. And another one was that I really liked from him was showing the overall appreciation. People are afraid that investing in real estate is not a good idea. Look at this data from 1942 to 2022. So that's 80 years.
Wow.
In this period of time, the prices appreciated 73 times for 73 years. Out of 80, only 7 we had some drop. Of course, we can see here 2007, 2008, those are famous years. But after that, it started appreciating again. And one time, here is one is for just 1 year in 1955. It was just flat, nothing happened.
So that's a key. So I've seen this graph over and over again in different forms, and it's key. So we had 5 years here with the real estate crash that prices dropped, and then we just had our in the 90s we had the small drop, and it was what 1% on the drop over in the 90s. So everybody who's kind of waiting on prices to come down, this is the year. This is how the years ended. So in a given month in those years, you might have seen prices come down because it might have been the fall, or it might have been, a seasonal thing, or maybe, something happened, like something happened. But the year over year, there's only been 7 years in the last 73 where prices have come down. So people that are waiting for prices to drop, they're waiting for the big crash. They're thinking they're gambling and putting the numbers in their favor. Historically, you're taking a 10-to-1 risk that it's not a good bet. There's no historical evidence that the prices are going to come down significantly, and while they're waiting, prices are going up 5 to 6% each year. So even if it does make a drop, they wait 2 years. It's got to do a 10% drop just to get back to ground zero from when they started.
Yeah, but everybody gets stuck in that thinking, like, this time is the time. You know what I mean? And they apply that to so many things in life, in their lives, that it's like, but this is going to be another one of those times where it's dropping.
Yeah.
And typically, buying the property, it's a long-term investment, unless you want to flip something and sell real fast, buy and sell real fast. But if you buy in as a long-term, you can tell that even if you buy in now and then, the appreciation, the value drops after a couple of years, you're gonna catch up and actually make more money.
Yeah.
It's a savings account you live in.
That's right. It's time in the market, not on the market. Thank you for sharing the slides. I'm actually going to take that and make that a separate video as well, just for more evidence, because people are making decisions based on something that is likely not going to happen, and it may end up being detrimental in the future. I think they need to understand, that the press isn't giving all of the whole story. So
I'll send you that PowerPoint presentation.
Okay, that'd be fantastic. All right. All right. Well, I hate to cut this short, but I've got to head out for an appointment. Did you have anything else, or do you have any other questions? Or
I have nothing, but I really love that top on you.
Oh, thank you. I love yours.
Thank you. What about my top?
Your top looks great too. I should have been in black.
Oh yes, well, yours of course.
You get the black limo. All right. Have a great week, and we'll see you next week.
All right. Thank you.
Bye.
Bye. Bye.